Okay guys, so now let's move to seminar 4. Okay, so as you see here, seminar 4, we have 3 questions, 2 questions on target costing and the third question on life cycle costing. Okay, yeah, so let's start with the first question. In the first question, this company Orange Limited is considering launching a new product and will use target costing to arrive at a target cost for the product. The following information has been given to you to calculate the target cost and the actual cost. So the target selling price, so this is our target or the business target selling price, £50 per unit. The company has firm orders for 20,000 units at a price £50. So this is the selling price per unit. Okay, the fixed costs are 241,000 per year. Okay, labor time required to make 1 unit, so each unit takes 20 minutes, and we pay, or the business pays, £18 per hour for labor, £18 per hour. Okay, the required profit margin, the required return is 40% of the selling price, and the material required per unit is 500 grams per unit at £30 per kilo. So each kilo is £30. Right, so the question asks you to calculate the cost gap that exists for this product. So now the first thing you need to calculate, the target cost per unit. You need to calculate the target cost per unit. And if you remember, the target cost per unit equal the sales price per unit minus the profit margin per unit. If you remember, the selling price minus the required return. So the selling price is £50 here. It's the question does really give you this £50, the target selling price. We have no issues here, so you need to deduct the required return on the profit margin, which also the question states that the required profit margin is 40%. So if you multiply £50, if you multiply by 40%, you should be able to find £20. So the required return is £20. So selling price, if you take away £20, so that goes with £30. So £30 is what is the target cost, Okay, so of course when it comes to actual cost, or the estimated cost, so we need to think if it's more than £30, this means we have cost gap, and we need to suggest some ways how to close the cost gap. So let's start with the actual cost. For the actual cost or estimated cost, it does tell you here that the fixed cost is £240,000 per year. In this case, so if you divide it by the number of units, which is 20,000 units here, you should be able to find that the fixed cost per unit is £12. The fixed cost per unit is £12. Okay, that's fixed cost. For labor, each unit takes 20 minutes. And and £18 per hour, right? So what does that mean really? What does that mean? This means if each unit takes 20 minutes, right? 20 minutes, and we have here, we pay £18 per hour. So think about it, how many 20 minutes in 20 minutes in 1 hour? So 60 minutes, so 3, isn't it? So 20 minutes. So 3 is 20 minutes. Okay, so in this case, if you divide £18, divided by 3, okay, by 3, so you should be able to find that the direct labor cost is £6. Direct labor cost is £6 because 6, 12, 18. So that's £6 per unit for 20 minutes. £6 for 20 minutes. So per unit, direct labor cost £6. Okay. Material. What's left is for the material. For the material, we have required per unit. Per unit is 500 grams per unit, and this 500 grams we pay the cost of material is £30 a kilogram. So 500 grams, so how many grams in 1 kilogram is 1000 gram, isn't it? So in this case 1000 gram, so this means if you divide by 2, that's 500, so 2 in 1000 gram. So in this case, if 1000 gram, we the cost us 30 pound. This means half of it is half kilo, which is 500 gram. So that's 15 pound, isn't it? That's 15 pounds. So 30 pound divided by 2, it's 15 pound is the material cost per unit. So if you add them together, if you add them together, that's 12, 6 and 15, that's 33 pound. So the estimated cost is 33 pounds. So as you see, target cost per unit, 30 pound minus 33 pound, which is the total cost per unit, the estimated cost per unit, so equal 3 pound, which is the cost gap. So as you see, the business is struggling to close this cost gap. In this case, you need to suggest some solutions, so how really they can close the cost gap. And of course, these some of the suggestions including, for instance, can we find cheap labor? Do we need really high skilled labor to do the job, or we can find low skilled labor? In terms of material, can we buy cheap material but we don't compromise with the quality? Can we find a cheaper supplier? Again, that's something that business can answer. How about in terms of can we increase the volume of sales, the volume of activities? So if we produce more, this means the cost or the fixed cost per unit will be less. That's economies of scale concept, isn't it? Yeah. So of course, one of the strategies we move is value engineering. And if you remember about the value engineering, that we focus on the features which the customer perceived more. Also, if you remember, we also covered about the Kaizen costing, which can help. So again, all these can help really to close the cost gap. Okay, the only suggestion, please do not write it down, is to increase the selling price. Yeah, of course, if I increase the selling price, yeah, of course I will close the cost gap, isn't it? But please, this is the only solution. You cannot say it because it's wrong. Why? Because the aim of target costing is not about to increase the selling price. It's about the target selling price. This is the selling price we want. We need to achieve a target cost. This is the point of this target costing. So this is question number 1. Hopefully it's clear. So now let's jump to question number 2. Question number 2 also about target costing, Carrots Limited. is considering designing a new product and will use target costing to arrive at a target cost for the product. Okay, great. Here we go. So for the target selling price here, we have £60 per unit. The company has firm orders for 15,000 units at the price of £60. So the orders, the units so far, it's 15,000 units. That's fine. Fixed costs 165,000 per year. Labor rate is £12 per hour. Okay, but doesn't give you how much time per unit. Thus we might struggle with this, right? The required profit margin is 40%, and the material required for per unit is 200 gram and per unit, and £80. The material cost is £80 per kilogram. Okay. And the question asks you to calculate the to avoid the cost gap. Look, this is very important actually, to avoid a cost gap. So we don't need a cost gap, so we need to calculate the target time for the labor component of the product, which will enable the 40% margin and target cost to be achieved using the following table. So what the question tells you, the question gives you all the information except one thing. It doesn't give you the labor time. It doesn't give you the labor time. So what the question is suggesting is telling you, right? So you need to calculate everything, and you need to tell me how we need to tell the company how the labor time per unit, so they can stick with it in order to avoid the cost gap. Like, let's have a look. Now, in terms of target cost, as I mentioned, we need to start calculating target cost, and the target cost equal the selling price minus the required return. So the selling price is £60, and from £60, what you need to do, guys, you need to minus the required return, and the required return is £24. Required return is what? Is £24. Why is £24? Very simple, because the question tells you the required return is 40%. So the margin is 40%. This is from the selling price. So if you multiply 40% times 60, okay, this is £24. Okay. Yeah, that's great. So 60 minus 24 equals £36. This is the target cost. In terms of estimated cost, we have here, we start with a fixed cost here. It's £165,000. And again, if you divide £165,000 by 15,000 units, you should be able to find the cost, or the fixed cost per unit, equal 11. That's great. In terms of leave the labor at the end, of course, because we need the balance. We need to balance it, so leave it at the end, please. So let's jump to the material. In terms of material, each unit per unit is 200 grams, and we pay the cost per kilogram is £80. In this case, what you need to do, if you remember, so how many grams in 1 kilogram is 1,000 gram, isn't it? And here we have 200 grams. So what you need to do, so it's a 5 times, isn't it? So 1,000 gram divided by 200 gram is 5. So in this case, what you need to do, guys, you need to divide 80. So 80 divided by 5, you should be able to find 16. Yeah, you should be able to buy 16. Okay, here we go. Okay, guys, so that's 16. That's 16 here, 16 here. Okay, the material cost per unit. Okay, that's great. So now in terms of labor, here, what is the labor cost? Remember, that here it does give us only what the labor rate. So only it does tell us that the labor rate per hour is £12. That's fine, but we don't know how much time each unit takes. It does take 20 minutes, 40 minutes, 50 minutes, 60 minutes, the whole hour for £12. So we don't know really. So, but the question asks you that to avoid a cost gap. So in this case here, we put 9 here. Why did we put 9? In order to make it equal, right? So we balance, that's balancing figure, yeah? So that's £36, okay? So remember, if you count 11 and 16, right? If you count 11 and 16, this is what? This is a 27, 27, right? So 27, how much labor cost would be here in order to for them to equal 36? Of course, we need to put 9. So 9 is the balancing figure here. So as you see right now, they are both equal. As you see, they are both equal, £36, and we don't have cost gap. Now the question asks you that you calculate the target time for the labor component. The target time, in this case, how much time, target labor time per unit in minutes. So it's very simple. As long as you find the £9, that makes your life easier really. So what you need to do in order to find the time, so the direct labor cost is £9. So what you need to do, look at me, so £9, if you divide it by how much we pay per hour, or the company pay per hour, is £12, isn't it? £12 they pay per hour. So £9, okay, this is the maximum labor cost per unit. For each unit we pay £9, yeah? If you divide it by 12, so that's 0.75, yeah? So this 0.75, what you need to do, this is you need to multiply it by 60, which is 60 minutes, isn't it? In 1 hour we have 60 minutes, so you multiply it by 60 minutes. Here we go. You should be able to find 45 minutes. You should be able to find 45 minutes. So it's very simple, straightforward. So in this case, we need each unit takes 45 minutes to be ready as a labor. And if we manage to get it done by 45 minutes, what does that mean? This means that we are achieving this really, which is the £36, the target cost with the actual cost. Okay, great, excellent, lovely. Right, okie dokie. Right, so right, last question number 3. The question number 3 about life cycle costing. So with life cycle costing, it's really straightforward, very simple, straightforward. So with this company, as you see, they have 3 years, and each year there are available costs. For example, year 1 we have research development, and we have a product design here. That's only in year 1, for example, yeah. And marketing during the 3 years, okay. In terms of manufacturing cost, the variable cost per unit, so you need each per unit, anything per unit, guys, you need to multiply it by the number of units here in year 2 and year 3. Remember, we don't have anything in year 1 here. we don't have anything in year 1. Okay, so, and fixed production cost per unit, so we add it together for year 1 and year 2 and year 3, and you put the total. For distribution cost, again, variable cost per unit for distribution. Again, these variable cost per unit you multiply by a number of units sold and produced. They are the same anyway, they are equal. Fixed distribution cost, these you add them together. In terms of selling, again, these per unit you multiply by a number of units here. And fixed selling, you add them together. And the last one, the admin, you add the 3 years together. So it's very simple, really. So you just add them together. For per unit, what you need to do, you just multiply it by the number of units available. So if you look here, you can see that the total for research and development, this product design cost, marketing cost, fixed production cost, fixed distribution, fixed selling, admin cost. So as you see at the beginning, we listed only the fixed elements, all the fixed cost elements here. Can you see? All the fixed cost elements. So then we started with the variable manufacturing overhead. So once we multiply the per unit, the variable cost per unit in each units in year 2 and year 3. Same with variable distribution, same with variable selling, as you see. So, and these the final figures for the 2 years there. So once you add, if you add them all together, you should be able to find the total cost is 24,690,000. And if you divide it by number of units, which is 300,000 units, why 300,000 units? Because in the question, 100 and 200, that's 300,000 units. So you should be able to find that the cost per unit equal 82.30. 82 pound point 30 is the cost per unit. So as a business, of course, they need to think it twice, because this is the cost per unit. Of course, the selling price must exceed this 82.30. Otherwise, they shouldn't go ahead with the project. So this is life cycle costing. A benefit of life cycle costing. So again, we introduced a lot of benefits there. So it's your job to do some theory research and just find out some the benefit and also the challenges of life cycle costing. Right. So that's all from me. So try it again and hope you'll be fine. So any question, just let me know. Thank you very much. See you guys. Bye.